Good day and welcome back to the Forex Education series. What we're going to be discussing today is Forex brokers, the different type of brokers that you get, ECN versus STP and dealing desks. Okay, so what you see over here is just a basic flow of how your orders are routed. So you have the trader who then places an order on his system, goes through onto the electronic trading platform, and then you have two options. It'll either get routed to a dealing desk or a non-dealing desk. On the dealing desk side, there are two things that can happen. You have losing trades, you have winning trades. Now the losing trades are counter traded inside the system and become the broker profits. The winning trades are then processed to offset the broker's risk. On the other side, we have a no dealing desk option, which is basically straight through processing that goes through to the interbank liquidity providers, which consist of banks, hedge funds, mutual funds, brokers, and investment corporations. So that just gives you a basic idea of how your orders are routed and your different options available. So a dealing desk, or what is known as Forex market makers, these are brokers that operate. They route the orders through the dealing desk and quote fixed spreads. The way they earn their money is through the bid-ask difference, as well as when a client loses a trade. Basically what they do is they then hedge the client's orders, entering into an opposite trade. So a dealing desk or market maker literally makes the market for traders. So when traders want to sell, they buy from them, and when traders want to buy, they sell to them. For example, they will take the opposite side of the trade and in this way create the market. So the trader doesn't see the real market quotes. This then allows the dealing desk brokers or market makers to manipulate their quotes where they need to in order to fill the client's requested order or the price that they request to be filled at. NDD or no dealing desk. These are Forex brokers that provide access to the interbank market without passing orders through the dealing desk. A true NDD broker has no requotes on orders and no additional pausing during order confirmation. This is particularly helpful as it allows trading during news times with no restrictions on the trading. That is the ideal situation. Okay, an NDD broker can either charge a commission for trading or choose to increase the spread and make Forex trading commission free. And NDDs can either be STP or an ECN plus STP. We'll go through STP now. STP, which is known as straight through processing, are brokers that send the orders directly from the clients to the liquidity providers, the banks, or other brokers. Sometimes STP brokers have just one liquidity provider, or they may have several. The more liquidity providers they have, the better it is for everyone. They then can offer tighter spreads, better fills, and essentially foster execution for the clients. So the fact that the traders have access to the real-time market quotes and can execute trades immediately without a dealer intervention is what makes the platform STP. STP brokers are compensated through the spread. They can provide you with variable or fixed spreads. They route your trading orders, as I said, to liquidity providers, the banks, and act as an intermediaries between their clients and the banks, which then receive the prices posted by the banks on the interbank market. Most of the banks, in fact, offer fixed spreads and are essentially market makers themselves. So an STP broker has two options. They can either provide you with a fixed spread, or they can leave the spread at zero and let the system take the best bid ask from the number of banks that are provided. And in this way, they can provide you with the variable spreads that you see. So that's Stp Brokers. Okay, Stp Brokers also can run a hybrid Stp model where they provide dealing desks plus no dealing desks. So Stp Brokers, the way it works is they sign a business contract with its liquidity providers, prime brokers. The contract terms regulate minimum transaction amounts that will be accepted by the liquidity providers. So small orders, i.e. below 0.1 of a lot. One lot is $100,000. 0.1 would be 10,000 US dollars. So a mini lot. These will not be accepted by the liquidity providers, and these orders are then handled by the Stp broker. So in this case, the Stp broker becomes the counterparty for your transaction, and they use the dealing desk model that we discussed with in the previous slides on dealing desks. So if you trade a mini account, your Stp broker is most times becomes the counterparty for your trades. On the larger trades, as a rule above the mini lot or 0.1 of a lot, the Stp broker uses its real Stp technology bridge and sends orders to its liquidity providers. With each transaction, the broker then receives a portion of the spread. Okay, brokers and revenues, fixed versus variable spreads and versus commission. Ecn Forex Brokers always have variable spreads. Ecn Brokers charge a commission for trading Forex. The commission is the only revenue or profit an Ecn broker receives. So Ecn brokers are not making money on the bid-ask spread difference, as you see with dealing desks or market makers. So Ecn brokers, or electronic communication network as it is known, are forex brokers which are additionally allow clients' orders to interact with other clients' orders. They provide a marketplace where all the participants, the banks, market makers, and individual traders trade against each other by sending competing bids and offers into the system. Participants interact inside the system and get the best offers for their trades available at that particular time. All trading orders are then matched by the counterparties in real time, and for this a small trading fee is charged or commission is always applied. Sometimes Stp brokers are discussed as if they were Ecn brokers, but to be a true Ecn broker, the broker must display the depth of market, or what is known as the DOM, in a data window. So the clients can then see their own orders in the system and allow other clients to hit those orders. With Ecn broker traders, they can see where the liquidity is and execute the trade. So you can essentially see your volume and who's trading where at what price. So, in conclusion, Ecn brokers are the purest of breed among all forex dealers. They don't profit on the spread difference, and their only profit comes from commissions. Ecn brokers are very transparent, and as I mentioned, you can see the depth of the market, i.e. the buyers and the sellers, and the volumes that are going through. Stp brokers make money on the spreads, no dealing desk to monitor and counter trade clients' orders unless it has a hybrid Stp model where they process the smaller amounts, the mini accounts, and are able to set their own price via spread markup for routing trading orders to liquidity providers and providing their clients with advanced trading services, lower account deposits, faster execution, and anonymous trading environment with no dealing desk. So that's Stp brokers. Market makers make money on the spreads and by hedging their clients' orders. They can. A good thing about certain market makers, they will guarantee your fill. So in a fast moving market, you may get a better fill with a market maker than you will get with an Ecn broker. At the end of the day, all brokers provide different services or specific services. So what you need to do is analyze your needs and your type of trading and select the correct broker to fill those needs. I look forward to our next session where we can continue our education on the Forex markets. Thanks for attending. Speak to you soon.